Hello traders, welcome back to another video. So we are looking at USD JPY and I'm gonna start on the 4-hour to just analyze my overall market structure. So as you all know, the market pushes to the downside just like this, and what we were expecting is all those breaks of structures to be pushing to the downside. Let's say maybe you have your high here, then you have your low, then you have your lower high, then you have your lower low around here, then you have your lower high, then you have your lower low, lower high. So just like that, you'll be having breaks of structures to the downside. So this is a break of structure to the downside. This is another break of structure to the downside again. Then we'll be having another break of structure to the downside. So whenever you have like these breaks of structures, what you need to understand is that the market has to push back internally just like this, giving you those internal market structure pushes to the upside, and then it will be creating an uptrend within this point, and then that uptrend will just hit an area of supply. Let's say this area of supply here. Then what you'll be expecting on the lower time frame is a realignment to show that the market is no longer creating those lower lows, but like it's gonna take out this low here. It's no longer creating those higher highs and higher lows, but it's pushing to the downside, creating those lower highs and lower lows, guys. So after having this change of character here, that is when you'll be looking at an area of supply again. Then you'll be looking for those nice selling opportunities. So this is the overall trade idea that we have, or this is the overall model that we use whenever we are looking for those selling opportunities. So in this case, you'll clearly notice that the USD JPY is pushing down, guys. We can start off from this point. That's okay. So you have your high, your low, then you have your higher high, higher low, higher high, then we had a lower low, just like that. So even if we draw them up, that is when you're going to understand each and everything. So break of structure up, break of structure up, and then we use the 3 candle pullback. Obviously, for those who don't understand, just comment pullback and I'll make a video specifically for pullbacks, guys. Then we have an area of demand here, area of demand right there. Then we had a change of character within this point, just like that, charge. And then after even the change of character, you can see that the market tried to push back to the upside, but like we initially failed to break this structure here. So which means that we are continuing with our breaks of structures to the downside. So POS, then an area of supply within this point here. Then the market sold off, sorry about that, this is a supply. Then we had another break of structure within this point here, of which after this having this break of structure, you'll clearly notice that this is your low, lower high, then this is your low, lower high, then this is your low here. So this was your previous high right there. Then the market tapped into this area of imbalance around this point here. Then after tapping off this imbalance area here, you can clearly see that we had another break of structure just like this. Then you can just also use your Fibonacci tool, guys, from the high to the low, just like that, so that you can clearly determine your area of interest. So around this point, we didn't reach any area of interest. As you can see, from high to the low, the market had to reach this red line here, maybe above this area here, just because this is a supply, this is an imbalance, so it reacted to this imbalanced area right there. So let me just draw it out so that you can see it. So this imbalance here was crucial just because the market reacted from it. Then after reacting from it, we had your high here, then you had your low here, then you had your lower high, then you had a new break of structure giving us a new lower low. So just like that, clean break of structure. Then as you can see around this point, we had 1 2 3 pullback. So it means that this is your lower low, this is your lower high here. Even if you take your Fibonacci tool from the high to the low, you can clearly notice that the market tapped into an area of discount. That is why we sold off very nicely. So there's an imbalance here, this is your area of supply right there, guys. So that is why the market sold off very nicely right there, guys. So after that, we have a break of structure, so which means that after having the break of structure, this is your previous high, then this is your lowest point right there. So this is your trading range. From the high to the low, you have an overall trading range, and what you expect is for the market to pull back into this area here. So around this point, this is where we expect the market to pull back into, and then this is your area of liquidity. So I'll be expecting the market to tap into, take out this liquidity, and then we have this supply area, as you can see. Then this is also the extreme supply zone around this point here. So whenever we take out all these two areas here, or whenever we take out this liquidity here, it means that the market has to pull back to the upside, tap into this area, give us a change of character. That is when we can get to sell. Then if this one fails, just because it can fail, it means that we have to take out this area here. Then we look for our selling opportunities, just like that. So I hope you understood each and everything that I told you here, and I'll see you on another video, guys. And if you want our course, you can just check out my WhatsApp link in the description below, so that you can acquire our course and start learning, guys. See you on another video. Peace and love.